India's latest economic move has left the world stunned. A $20 billion deal, sealed quietly but revealed with thunderous impact. To understand why this agreement is sending shockwaves across global markets and political circles, we have to look at its sheer scale. $20 billion isn't just a number on a sheet of paper. It's leverage, it's strategy, it's a message. When a nation like India makes a move of this magnitude, it signals not just commercial ambition, but a deliberate shift in how it positions itself against the world's largest power, the United States. For decades, India has been seen as a rising economy, one that balanced its ties between Washington and Moscow while slowly leaning into U.S.-driven global markets. American defense manufacturers, tech giants, and energy suppliers have often considered India not just a partner, but a potential jackpot for future contracts. This new deal changes the entire equation by putting $20 billion into the hands of another global player and locking the U.S. out. India is announcing that it's no longer satisfied playing the secondary role in international commerce. It wants to lead. What makes this deal truly staggering is its size compared to India's recent economic history. Few nations can throw around tens of billions of dollars in one stroke without rattling financial centers from New York to London. India, however, has chosen this moment, with its economy surging and its global confidence at a peak, to take that leap. The sheer financial weight of the deal is enough to boost entire industries in the partner nation, while simultaneously starving U.S. companies of opportunities they had long assumed were guaranteed. For Wall Street, this was not just a headline. It was a wake-up call. The symbolism runs deeper. When we say $20 billion, we are really talking about more than just capital. We are talking about employment pipelines, technology transfers, and future influence. That amount of money doesn't just buy products, it buys loyalty, it buys leverage, and it buys global positioning. In the world of geopolitics, money at this level is never neutral. It carries consequences, and it reshapes alliances. India is signaling that it is ready to be a heavyweight, and it is not afraid of the ripples that come with bold moves. The United States, of course, has reason to take notice. $20 billion that could have gone to American firms to strengthen economic ties with New Delhi, to deepen defense cooperation, to reinforce strategic trust, is now going elsewhere. This deal, by its size alone, forces the U.S. to reconsider how it approaches its relationship with India. Does Washington step up with bigger offers, or does it risk watching India slip into the orbit of other power players who are more than eager to step in? For India, the $20 billion deal is not just an investment. It's an announcement, one that says the country has reached a point where it can make decisions based solely on its own strategic interest, rather than on pressure or persuasion from the United States. It's a declaration of independence in economic terms, and the world is watching closely to see where it leads. This is why the scale matters so much, because it is not just about a deal, but about a statement of intent. $20 billion is the price tag attached to a new era of Indian ambition. It's not just about goods, services, or contracts. It's about India showing the world, and especially Washington, that it has arrived at the table as a player who can no longer be ignored, bought, or managed. This deal is the opening chapter in what may become a long and complicated story of rivalry, realignment, and raw power. Behind every major deal lies the question of partnership. Who stands on the other side of the table when India signs a $20 billion agreement that rattles Washington? The answer is not a simple one, because this deal isn't only about economics. It's about alliances, trust, and positioning in a world where power is shifting faster than ever before. The very choice of partners sends a louder message than the money itself. And in this case, India's choice is being read as a direct challenge to U.S. Dominance for decades, India has balanced itself carefully between East and West. On one hand, it leaned on the United States for trade, technology, and diplomatic backing. On the other, it maintained ties with Russia for defense and energy, while never fully severing its links to Middle Eastern oil producers or China's regional networks. This $20 billion deal signals a change. Instead of leaning toward Washington, India has pivoted toward others, whether it is Moscow for strategic defense systems, the Gulf states for long-term energy security, or even Beijing in select economic corridors. Each of these potential partners carries weight, but together they send a singular message: India is charting its own course. Consider Russia. Despite sanctions and U.S. warnings, Moscow remains a reliable supplier of defense equipment and energy resources for India. A large portion of this $20 billion could flow directly into agreements that strengthen India's military independence, insulating it from U.S. pressure. For Washington, that is not just a commercial loss, it's a security concern. A stronger defense partnership between India and Russia means fewer contracts for American arms makers, but more importantly, it means India can resist U.S. leverage when tensions rise. Look toward the Middle East and the picture grows even sharper. Gulf states like Saudi Arabia and the United Arab Emirates are diversifying their investments, seeking not only buyers for oil, but also partners in technology and infrastructure. If India directs a significant chunk of this $20 billion deal toward energy imports and joint ventures in the Gulf, it signals that it is locking in long-term energy security away from U.S. suppliers. In today's volatile oil markets, that kind of shift could tilt global balances and undermine Washington's ability to pressure India through fuel markets. And then there is the elephant in the room, China. While New Delhi and Beijing are rivals on the border, they are also economic partners in certain sectors. If even a fraction of this deal involves Chinese infrastructure, technology, or manufacturing, it would represent a bold statement that India is willing to use Beijing's economic weight when it suits its national interest, regardless of Washington's concerns. That possibility alone is enough to set off alarms in the U.S., where fears of a stronger Beijing-New Delhi connection already run deep. The choice of partners matters because it is never just about money. It is about who India trusts to build with, who it envisions standing beside it in the decades to come. By steering $20 billion away from American firms, India is rewarding partners who give it flexibility, respect its independence, and allow it to negotiate without being forced into Washington's framework. This is more than diversification, it is strategic rebalancing. For the United States, the message is clear: it cannot assume automatic priority in India's decision-making anymore. The world's largest democracy is openly flirting with other partners, investing billions into relationships that sideline American influence. For those partners, whether Russia, the Gulf, or even China, this is not just a windfall. It is a chance to cement their own foothold in one of the fastest growing economies on Earth. In global politics, money has a voice. With $20 billion on the table, India has spoken loudly. It has told the world it will no longer put all its bets on Washington. Instead, it will spread its influence, strengthen old friendships, and test new ones. The choice of partners is not just a list on a contract. It is a declaration that India's future alliances will be written on its own terms, not America's. When a $20 billion deal slips out of Washington's grasp, the fallout isn't just political, it's financial, industrial, and deeply strategic. For the United States, this isn't only about losing a contract, it's about losing a foothold in one of the fastest growing markets in the world. And the ripple effects will be felt across multiple industries, from defense to energy to technology. First, the defense sector. For years, American arms manufacturers have counted on India as a customer that would expand steadily, relying on U.S. systems to modernize its military. Fighter jets, drones, missile systems, surveillance technology. All of it has been pitched with the assumption that New Delhi would continue to lean on Washington. Now, with $20 billion directed elsewhere, those assumptions are in jeopardy. American defense companies stand to lose billions in potential contracts. Fallout goes beyond money. It weakens U.S. influence over India's defense posture, which Washington has long viewed as critical to balancing power in Asia. Next, the energy market. The United States has been pushing liquefied natural gas exports and oil deals as part of its strategy to deepen ties with India. For U.S. energy giants, India represents not only a massive consumer base, but also a chance to secure long-term partnerships in Asia's booming economies. If this $20 billion deal involves energy purchases from the Middle East or Russia, U.S. firms lose a critical opening. That means fewer jobs in American energy sectors, lower revenues for companies counting on Asian demand, and a missed opportunity to tighten India's dependence on U.S. fuel supplies. Then there's technology. American tech giants have long viewed India as both a marketplace and a hub for future development. Investments in cloud computing, digital infrastructure, and defense-related AI projects were seen as near certainties. But a deal of this scale directed toward non-U.S. partners could shut American firms out of India's next big leap. Instead of Silicon Valley leading the way, the contracts could flow to Moscow, Beijing, or European capitals, leaving Washington scrambling to reassert itself. But the economic fallout doesn't stop at the corporate level. It extends to geopolitics. Every lost contract is a lost lever of influence. When India signs $20 billion worth of agreements outside U.S. channels, it builds deeper interdependence with other nations. That interdependence can be political armor. For Washington, it means one less bargaining chip in future negotiations over trade disputes, security cooperation, or diplomatic standoffs. Simply put, America loses more than money, it loses leverage. The impact also hits Wall Street. Investors who once assumed that India would remain a reliable market for U.S. companies are now forced to reconsider. Stock prices for firms tied to defense and energy exports could feel pressure. Analysts will start to factor in the risk that India's future contracts won't automatically favor American companies. This introduces uncertainty, and in global markets, uncertainty costs money. On the Indian side, the fallout looks very different. By denying U.S. firms access to this $20 billion, India strengthens its negotiating hand. Other partners will see New Delhi as a reliable player who rewards those willing to treat it as an equal. For India, the short-term benefit is diversification of supply chains and economic partnerships. For the U.S., the short-term cost is lost revenue, but the long-term cost may be the erosion of influence in one of the world's most pivotal economies. Ultimately, the economic fallout is not just about who gains the $20 billion, it is about who loses it. And in this case, the United States finds itself not only cut out of a massive deal, but also facing the larger reality that India may no longer be the predictable partner Washington once assumed. The deal is a reminder that in the new global economy, loyalties shift quickly, and money speaks louder than promises. Every major economic deal carries political undertones, but a $20 billion decision of this magnitude does more than just move money. It shakes the foundation of alliances, redraws the map of influence, and sends ripples across continents. This is not simply a contract, it is a geopolitical shockwave, and the epicenter is India. For decades, Washington has counted on India as a steady partner, a democracy aligned, at least in principle, with U.S. values and strategic goals. India's position in South Asia has made it a crucial counterweight to China, a key market for Western industries, and a partner in defense cooperation. But with this $20 billion deal, New Delhi has made it clear it will no longer play the role of junior ally. Instead, it is stepping onto the stage as a power determined to chart its own course, even if that course cuts across Washington's interests. The first tremors of this deal are already being felt in Asia. China sees an India that is more confident, more assertive, and less dependent on U.S. approval. While Beijing and New Delhi remain rivals in many respects, China understands the significance of an India that refuses to be bound by Washington's orbit. For Beijing, it creates opportunities, whether in trade, technology, or regional diplomacy, to exploit the cracks in U.S.-India relations. The shockwave, in other words, weakens America's united front against China. In Moscow, the reaction is different but equally powerful. Russia has long sought to maintain relevance on the global stage despite sanctions and isolation from the West. A multi-billion-dollar deal with India gives Moscow both economic lifeline and political validation. It signals that Washington cannot contain Russia completely because major powers like India are willing to keep the door open. For the Kremlin, this isn't just business. It's proof that the U.S. grip on the international order is loosening. The Middle East also feels the impact. Gulf states, increasingly eager to diversify their alliances, view India as a rising partner capable of reshaping global energy flows. If billions of dollars are directed into oil and infrastructure deals with Saudi Arabia, the UAE, or Qatar, it means a stronger South-South alliance emerging outside U.S. frameworks. The geopolitics of energy, once dominated by Washington's sway, start to look very different with India pouring investments into regional partners who are no longer content being secondary players. And then there is Washington itself, where the shockwave lands with the most force. For policymakers, this deal represents more than an economic setback. It is a warning that America's influence over India, one of the anchors of its Asia strategy, is not guaranteed. If New Delhi is willing to sideline U.S. firms in favor of others, it raises questions about the reliability of India as a strategic partner. The trust that underpins alliances, built on shared economic interests as much as shared values, has been shaken. This is where the stakes rise higher. If Washington cannot rely on India's alignment, then its broader Indo-Pacific strategy begins to wobble. U.S. efforts to build coalitions against China, to promote democratic solidarity, and to secure supply chains away from Beijing all hinge on India's role. A $20 billion deal may sound like economics on paper, but geopolitically, it risks unraveling years of American strategy. India, of course, sees this very differently. From New Delhi's perspective, the shockwave is intentional. It wants to be seen as independent, as strong enough to strike its own bargains, and as unwilling to be cornered by Washington or anyone else. It wants the world to know that it can tilt the balance of power simply by choosing its partners, and in this case, by choosing not to prioritize the United States. This is why the deal matters far beyond its dollar value. It has become a statement of sovereignty, of ambition, and of a shifting world order. The shockwave will not stop in Asia. It will be felt in Europe, in Africa, and anywhere nations are watching closely for signs that America's dominance is no longer absolute. And with this single decision, India has proven that it is capable of shaking the system, forcing allies and rivals alike to rethink the future of global power. In Washington, the news landed like a thunderclap. India, America's long-courted partner in Asia, had just inked a $20 billion deal that cut U.S. companies out of the picture. Behind closed doors, the reaction was swift shock, concern, and a growing realization that the strategic balance may be slipping away. For American policymakers, this was more than an economic loss. It was a political signal, and one that could not be ignored. Inside the corridors of power, the first question was simple: how did this happen? For years, Washington has invested in building trust with New Delhi. High-level visits, defense partnerships, trade agreements, the U.S. positioned itself as India's closest democratic ally in an unstable region. Yet when the time came to strike a massive deal, India looked elsewhere. For American officials, the move felt less like business and more like betrayal. The economic implications stung immediately. American defense giants, already lobbying heavily for contracts, saw billions evaporate overnight. Energy firms that had hoped to lock in long-term Indian supply agreements were suddenly sidelined. And Silicon Valley, eager to expand its dominance in India's booming digital economy, watched as opportunities slipped to other players. Each of these sectors has a voice in Washington, and collectively they began pressing the administration for answers and for action. But the deeper concern went far beyond dollars. The deal raised unsettling questions about India's reliability as a partner in America's grand strategy against China. For years, Washington has leaned on New Delhi as a counterweight to Beijing, a crucial player in the Indo-Pacific framework. If India is willing to bypass U.S. firms on a deal of this size, what does that say about its willingness to align with Washington in bigger geopolitical contests? Officials began to worry that India might be carving a path of full independence, one that could leave America isolated in its own game. Reactions within Congress mirrored the anxiety. Some lawmakers warned that the U.S. could not take India's partnership for granted, calling for a reassessment of aid and trade preferences. Others argued for doubling down, insisting that America should offer even bigger deals, sweeter terms, and deeper cooperation to win back New Delhi's confidence. The divide reflected a broader uncertainty. Should Washington punish India for drifting away, or woo it harder to keep it close? Neither answer seemed simple. In the media, analysts wasted no time framing the move as a blow to American credibility. Headlines questioned whether Washington had underestimated India's ambitions. Commentators asked if this was a one-time snub or the beginning of a long-term shift. The narrative emerging was clear. India is no longer afraid to push back, and the United States must now decide whether it can adapt to a world where influence is no longer guaranteed. Behind the scenes, diplomatic channels buzzed. U.S. officials reached out to Indian counterparts, seeking clarification, perhaps even reassurance that the deal did not mark a permanent drift. Yet the tone from New Delhi was unmistakable. India's decisions are based on its interests, not America's expectations. For Washington, the message was chilling, leverage was slipping, and the balance of trust was changing. The reaction also carried a note of urgency. If the U.S. fails to respond decisively, rivals like Russia and China will seize the opening, embedding themselves deeper into India's economic and strategic orbit. For policymakers in Washington, the fear was not just about losing one deal. It was about losing the long-term game, the influence, the trust, and the ability to shape India's choices in the future. In the end, the reaction in Washington can be summed up in 3 words: alarm, frustration, and doubt. Alarm that America's influence might be waning, frustration that years of diplomatic effort seem to yield little return, and doubt about whether the U.S. can still count on India as a cornerstone of its global strategy. One thing is clear: the $20 billion deal did not just shift money. It shifted power, and Washington knows it. The true weight of this $20 billion deal lies not only in what it means today, but in what it signals for tomorrow. When a country like India makes a decision of this scale, it is writing the opening lines of a new chapter, not just for itself, but for the global order. This isn't a single transaction. It is a statement of intent about the kind of future India envisions, and the kind of world it wants to help shape. For India, the message is clear. It is stepping out of the shadow of dependency. No longer satisfied with being seen as a junior partner to Washington, New Delhi is positioning itself as a power that calls its own shots. This $20 billion deal is proof that India can, and will look beyond the United States when it serves its national interest. That independence changes everything. It means that future negotiations with America will happen on India's terms, not under the assumption that alignment is automatic. It marks a new era of bargaining power for a nation that is no longer just emerging, but has already arrived. For the United States, the future looks far more complicated. Washington now faces the reality that India cannot be counted on as a guaranteed ally in every sphere. A $20 billion deal lost today could become $50 billion, even $100 billion, redirected tomorrow toward other partners. The long-term implication is that U.S. influence in Asia may continue to erode if it fails to adapt to this new reality. Washington must decide whether to compete harder for India's trust with greater offers and deeper cooperation, or risk watching India become the anchor of a multipolar world order that doesn't revolve around America. For global rivals, the future looks opportunistic. Russia sees in this moment a chance to secure long-term defense and energy ties that outlast sanctions. The Gulf states see a chance to cement India as a permanent buyer, reshaping the flow of oil and investment across continents. And China, though wary of India's rise, recognizes the opportunity to exploit U.S. unease, positioning itself as a parallel power willing to engage with India when convenient. In other words, this deal has created a ripple effect where multiple nations now see India as a pivotal player whose choices can tilt the balance of power. For India itself, the long-term meaning is confidence. This deal proves that it can shape its destiny without bowing to pressure. It shows that it can play multiple sides, secure resources from diverse partners, and keep its independence intact. That independence is critical in a future where global competition is intensifying over energy, over technology, and over military might. By diversifying now, India ensures that in the years ahead it won't be vulnerable to a single power's influence, not even America's. The larger question for the world is this: are we witnessing the birth of a new global broker? India has the population, the economy, and now the will to project itself as more than just a regional force. The $20 billion deal is not the end game. It is a rehearsal for larger plays in defense, in energy, in technology, where India will decide not just how it benefits, but how the world adjusts around it. This is what it means for the future. A future where India is no longer waiting for approval, no longer confined to the expectations of Washington, but setting the pace of global negotiations itself. A future where U.S. dominance can be challenged not just by China or Russia, but by a rising power that insists on being respected as an equal. This $20 billion deal is the start of that future, one where India steps fully onto the world stage, not as a follower, but as a force that others must reckon with.